All right, welcome to your TalkTickers briefing. Today, we are diving deep into RLX Technology's Q2 2025 earnings call. And wow, there is a lot to get through. We're talking a huge strategic shift, some really eye-popping numbers. Let's get right into it.
So, let's just get straight to the point. No bearing the lead here. The verdict for this quarter? It was a massive, massive beat. I mean, a really strong performance all around.
Okay, so let's start with a big one, the top line. The street was expecting, around $100.5 million in revenue? Well, RLX just blew past that, coming in at almost $123 million. That's a beat of more than $22 million bucks. You just don't see that every day. And yeah, it definitely got the market's attention.
And of course, when you post numbers like that, the market notices. The stock shot up over 7% on earnings day. And get this, the trading volume was more than 3 times the recent average. So yeah, it's safe to say investors were pretty happy with what they saw.
But hey, it wasn't just a revenue story. That's what's so impressive. I mean, not only did they smash revenue expectations, growing over 40% year over year, by the way, but they also delivered on the bottom line. Non-GAAP EPS came in at about 3 cents, a full penny higher than consensus. So this was profitable growth, which is exactly what you want to see.
So you're probably asking, okay, where did all this growth come from? And the answer is actually pretty straightforward, but it points to a huge shift in how this company operates. It all comes down to one thing: going global and doing it aggressively.
And look, you don't have to just trust me on this. The CFO himself, Mr. Chaloo, basically spelled it out on the earnings call. He said this performance was all about their international strategy. This wasn't just some lucky break. It was a planned, strategic move into new territory, and it's clearly paying off.
Now here's where it gets really interesting. How do they do it so fast? Well, the main engine here was a big acquisition they made in Europe. And just look at this timeline. They signed the deal in March, it was officially closed by the end of May, and by June, just 1 month later, that new company's revenue was already rolling into their Q2 results. That is some seriously fast and effective execution.
And I want to be clear, this wasn't just about buying revenue, right? They didn't just go out and buy a sales number. They bought a company with almost 2 decades of experience and what we call full-stack capabilities. So think about it, RLX isn't just an exporter anymore. They are now a true local player in Europe. With everything from R&D to distribution, they've got boots on the ground. That's a much smarter, more sustainable way to grow.
Okay, so this whole global push is really just chapter 1 of a much bigger story. Management spent a lot of time on the call laying out their new playbook, and it's designed to build a company that looks completely different in the future than it has in the past. You can really see the before and after right here. You know, the RLX of the past, it was basically an e-vape company, and its world revolved around China. The RLX of the future, it's global, and it's not just about vapes anymore. They're looking at the entire smokeless nicotine market. Why does this matter? Well, it's all about spreading out your risk and just playing in a much, much bigger sandbox.
And again, the CEO, Case Wang, she was pretty direct about this. She said, look, diversification is where the industry is heading. And they're not just talking about it. They've already got a prototype for oral nicotine products, which, by the way, is the fastest growing part of this whole market. And she mentioned that distributors are already giving them really good feedback. So you can see the next growth driver lining up right there.
So it's not just about new product types. They're also playing it smart within their core e-vapor business. You've got this trend some people are calling the big puff effect. Basically, consumers want more from each puff. So what does RLX do? They launch new products that deliver just that. But, and this is maybe more important, they're not blind to the future. They see regulators coming for disposable products, so they're shifting their focus to more sustainable, cartridge-based systems. They're skating to where the puck is going.
Now here's a really key point, and it's a little counterintuitive. A lot of people see more regulation and think, oh, that's bad for business. But for a big established player like RLX, it's actually the opposite. It's a huge advantage. Why? Because as governments crack down, they wipe out all the little gray market and black market guys. And where do those customers go? They go to the brands they can trust, the ones that are still on the shelf. RLX is basically weaponizing compliance.
Okay, so let's recap. We've got a huge beat on earnings, all fueled by this really smart pivot to go global and expand beyond just one product category. That's the what happened. Now let's do what we do here at TalkTickers, put on our analyst hat and figure out what happens next. First off, let's get some perspective. This isn't some beaten down stock that just had one lucky quarter. Even before this big jump, RLX was a monster performer. Over the past year, its return has been more than double the S&P 500. And compared to other consumer staples companies, it's not even close.
this stock already had some serious wind in its sails. So if you're watching this stock for the next, say, 3 to 6 months, what's on the checklist? Well, here's what I'm looking at. First, how is that European integration going? Are they hitting their marks? Second, are they entering any new countries? Third, can they keep their gross margins strong, up in that mid-20s range? Oh, and there's a dividend coming up too. And of course, we always have to keep an eye on the regulators. Those are your catalysts.
All right, so this brings us to the big question, the one we ask at the end of every briefing. We've got a company in the middle of this massive, high-stakes transformation, and so far, it's working. So what's the trade?
Okay, my idea here is a bit unconventional. I'm looking at a long straddle with an expiration out in Q1 of 2026. Now, why a straddle? The logic is pretty simple. The future of this company and its stock price depends on two things that are incredibly unpredictable: how well they execute this global rollout and what the regulators do next. If they knock it out of the park in Europe, the stock could fly. If they hit a major snag or get hit with a bad regulation, the stock could get hammered. With a straddle, we're basically betting on a big move happening. We don't have to be right about the direction. We just have to be right that this thing isn't going to trade sideways.
So my official rating for the stock is outperform. Bottom line, these guys have shown they can pull off a major pivot. They're growing sales, they're improving profitability, and they have what looks like a really smart plan for dealing with all the regulatory chaos. I think all the ingredients are there for this stock to keep beating the market.
And of course, I have to say it, this is our analysis, but you have to do your own homework. This is not financial advice.